Hello students, now we are going to cover today full-fledged sums of share capital transactions. Now previous lecture we have seen sums which can be asked in the exam for 4 marks. In this session I will be doing a sum which will be asked for 6 marks in your board exam. It's a full-fledged sum, and the sum what I have selected is a very tricky sum, and it will cover lots of points which will help you to master the concepts of forfeiture, pro rata allotment and the journal entries regarding it. So watch this lecture properly till the end. Such sums can come in your board exam for 6 marks. So total from this chapter expected is 17 marks, and out of 17 marks the sum what we are going to do today is expected to come for 6 marks. So watch the lecture till the end and solve the sum along with me to make your concepts more clear. So let's start. Now we need to read the question very carefully because this sum has pro rata concepts and concepts of forfeiture, concepts of reissue. So please read the question very carefully and understand it properly. The directors of Rockstar Limited invited application for 2 lakh shares of 10 each issued at 20% premium. Now the share is of face value rupees 10. Face value is the basic value of share, but we are not going to give our shares at the basic value or at the face value. We are going to charge 20% premium. So that is 2 per share. So I'll just mention it over here, rupees 2. Share was payable on 5 on application 4 including premium. Now when it is including premium, we will say 2 is towards face value plus 2 is towards premium. On allotment and balance on call. So towards face value we are getting rupees 5, rupees 2, 7 and balance. So that is rupees 3 on call. Now we invited application for 2 lakh shares. Public has applied for 3,20,000 shares, out of which application for 20,000 shares were rejected. So out of 3 lakh shares we rejected 20,000 shares and gave refund to them, and remaining were allotted on pro rata basis. So from 3,20,000, 20,000 directly reject. Remaining for 3 lakh shares, we allotted 2 lakhs on pro rata basis. Pro rata basis over here means that for every 3 share a person has applied, he will be allotted 2 shares. Mark this, pro rata basis. So Simba, an applicant of 15,000 shares, failed to pay allotment and final call. So 15,000 shares Simba applied for, but he is not going to get 15,000 shares because we are going for pro rata allotment, and as per pro rata allotment for every 3 shares he'll be getting 2 shares. So 15,000 divided by 3 into 2, that is 10,000 to pay allotment and call money. So he did not pay allotment and did not pay the call money. His shares were forfeited, and out of these 6,000 shares were reissued at a discount of 2 per share. Journalize. Now this is a full-fledged sum. We need to journalize, we need to write entries in the books of Rockstar Limited. Now to do that we'll have to do lots of working, and working are extremely important because working form part of your answer. Your answer may be correct, but if it is not supported by proper working, examiner may deduct marks. Also, to bring a clarity in on what you are doing, please make systematic working. Now, we start with working, then we will go for the entries because basic working we are ready with, and then we go to entries. So fatafat we can write the entries and close the sum. Now I have designed few formats for you to make the sum easy, working also easy, so that you guys don't make mistake. So replicate this similar type of working in your notebook. Now, first working is for various installments of face value and premium. So on application, we are asking for 5 rupees, no premium. On allotment, we have already written 2 plus 2, so face value is 2 and premium is 2, so total rupees 4, and remaining, that is rupees 3. So you can see over here on the screen that total 12 rupees we will be collecting from public towards a share. Out of that, 10 is the face value and 2 is the premium. We also have shares in areas. Name of the person is Simba. Name is Simba, but he's a defaulter and he did not pay. For how many shares? We can do a working over here, a small working in rough. So 15,000 shares into 2 divided by 3, because 2 shares were allotted for every 3 shares applied. Yeah. So this will be 10,000 shares. So 15,000 into 2 divided by 3, that is 30,000 divided by 3 is 10,000 shares. So Simba applied for 15,000, but we gave him 10,000 shares, and for those 10,000 shares, Simba did not pay the allotment money and also did not pay the call money. Now, this information given means we have made all the calls and Simba has defaulted on allotment and the final call. Now, total calls in areas and all, here it is not required because there are not multiple defaulters. So we will proceed with working note number 2. Now working note 1 is for breakup of face value including premium, and we write information about who all have defaulted. Working note 2 is for pro rata allotment, proportionate allotment. So we start with amount received on application. Now dear students, always remember, you write in bracket how many number of shares and amount per share. This will give you lots of clarity of concept and thought. So here shareholders applied for 3,20,000 shares into rupees. How much on application? You can see over here rupees 5. So amount received on application by the company is 16 lakhs. Now, out of the 16 lakh collected by the company, we will give refund to 20,000 shareholders because their applications were rejected. So over here, I hope now it's visible, less refund for rejected application. Always write in bracket number of shares, 20,000 shares into rupees 5 per share, 1 lakh. So now remaining is 15 lakh with the company less amount towards, because subscribed capital is more than the issued capital, the number of shares of issued capital we will take into account, that is 2 lakh shares. So amount towards issued capital, what we will be keeping, that is 2 lakh equity shares into rupees 5 per share. So 10 lakhs. Now remaining 5 lakhs, that is 15 lakh minus 10 lakhs, 5 lakhs. This amount is excess with the company. That is 1 lakh shares into 5. That's the extra money which the company got. But for those shareholders, we are already giving them some shares. So this amount will be kept with the company and it will be adjusted toward further calls. Now here we are going to adjust rupees 5 lakhs. So we write over here amount adjusted in allotment. Now dear students, let's say this amount was not 5 lakh, it was far more. So it may be a possibility that the excess amount with the company will be adjusted first towards allotment, and if anything extra is there, it will be towards the final call. However, in this sum, it will be adjusted towards the allotment only, because 2 lakh shares we are issuing and allotment we are asking for rupees 4. So 8 lakh may say 5 lakh we have already received. So here that situation is not there. In case it comes, we will see when it comes in the further sums. So I'll write in the bracket over here 1 lakh shares into rupees 5. So per share rupees 5 we have already received in advance, which we will be adjusting towards allotment. Now before we go to amount received on allotment, here there is a very tricky point. Dear students, please pay attention. A very tricky point is for calls in arrears, because Simba, he has applied for 15,000 shares. So for 5,000 shares, rupees 5 per share is extra already with us. And thereafter, when we called the allotment, he did not pay anything. When we called the final call, he did not pay anything. So we have to do a working for it before we go for working note number 4. Now we can do this later as a part of the sum also, but I feel that once we finish all the working, writing entries become a very smooth thing for us, because then we are in that flow of writing entries and working are already done. So we did not have a break that we write few entries, then we go to the working, we write few entries, go to the working. Okay. Now calls in arrears. So first of all of Simba, so amount due on allotment. Now this working we are doing only for Simba. So Simba had applied for 15,000 shares, we gave him 10,000 shares. So his amount due on allotment is rupees 10,000 into 4, that is 40,000. Now less. Now this is a tricky working, so please pay attention. Amount on application. Now amount on application, he paid for 15,000 shares into rupees 5 per share. So 75,000 amount is what we received. Less amount towards issued shares. So that will be 10,000 shares into rupees 5 per share. So that is 50,000. So net $25,000 we have already adjusted. So dear students, this 40,000 was amount due and 20,000 we have already received. So what is calls in arrears for us? It is 15,000. Now dear student, this is the amount of calls in arrears. Now where do we allocate this 15,000? Now we had to collect 10,000 for 10,000 shares. We had to collect rupees 2 towards capital. So that is 20,000. So out of 25,000, 20,000 is already towards capital and remaining is towards securities premium. That is rupees 5. Now over here, this 5,000 towards security premium we have already received, towards capital 20,000 we have already received. I'll just highlight this, change the color. So for this 25,000, this is the bifurcation. But amount of calls in arrears 15,000, now where we will allocate? But obviously dear students, ki 20,000 towards capital already received along with application, 5,000 towards premium we have already received on application. But what we have not received? We have not received 15,000 which will be adjusted towards premium. So whenever there is a deficit, first what all amount we have got will adjust it towards capital and then the remaining will be adjusted towards premium. So amount of calls in arrears is towards security premium. So I'll mention it over here. So amount of calls in arrears is towards security premium, which is 15,000 which we have not received. Now this is a very important number because we'll use this when we pass the entry for forfeiture of shares. Also we will use this amount for calculation on amount received on allotment. Now for amount received on allotment, working is very simple. Amount due on allotment. So amount due on allotment is on 2 lakh shares into rupees 4 per share. 4 is 2 face value and 2 premium. So 8 lakhs less already received working note number 2. So as per working note number 2, we already received 5 lakh. So what is remaining? 3 lakhs. Now out of 3 lakh, there is a call in arrear of Simba. So less calls in arrears of Simba. Working note 3, that is rupees 15,000. This 15,000 calls in arrears, it's towards premium. So what is left with us? 2,85,000. So this is the amount what we have received towards premium. Sorry, this is the amount what we have received, amount received towards allotment. So we are done with all the working. The first working, I'll have a recap, was for application, allotment, call and calls in arrears. Now, over here, we can write this numbers also, 3,20,000 and issued shares are 2 lakh. So remaining 1,20,000, out of that 20 is refunded and balance adjusted in allotment. Now we go to working note 2 where we calculate how much amount will be adjusted in allotment. Then we went for working note number 3 where calls in arrears of Simba, where we have to find out how much amount he has not yet paid to the company. And then finally we calculate amount received on allotment. In case you have any doubt or confusion or query regarding these working, you can write it in the comment below and I'll reply to you on that. Now, let's go to our main working, that's the main answer. Always remember to write the heading. So, journal entries in the books of, oh, it has become cooks, in the books of Rockstar Limited. Now, date is not given, so we'll write number, serial number we'll write over here, particulars, LF, debit, credit. Now, dear student, to understand this concept of taking money from the people in installment, we'll go back to our 11th standard journal entry where generally the first transaction was started business by bringing cash. So what entry we used to pass? Very simple entry, cash account debit to capital account credit. Now here it is a limited company and we are constructing capital for that company. So ideally our entry should be bank to capital or to bank to share capital. But here we have to pass lots of entry because the amount collected from the public, the shareholders, the owners is not at one go. It is in various installments. So there is a timing difference. On application, first we receive the money, then we decide on the shareholders. So always remember the first entry will be bank account debit. So when we want to issue shares, we will start inviting offers from public, and public along with application form will give us application amount. So first entry always will be bank account debit. Now, always remember, we always need to do the working number of shares into amount per share. This will help you to clearly understand the concept and also reduce the chance of mistakes. So application, at the time of application, we received 3,20,000 shares. We can write equity share or just share application, that is also fine. Account. Again 16 lakhs. Now dear students, again a very important point. Don't forget to write the narration. Now if in the question it is given, do not write the narration and you don't write, it's all fine. But if it is given in the question that you write, if it is given the question that you write narration, you have to write. But for a question like this, it's just given journalize. So you have to pass the journal entry. Now in this case, if you will not write the narration, you will not get full marks because narrations are part of the journal entry. So if narration is not written, it means your entry is incomplete. So dear students, please be very careful. You just have to write few words of English and I'm sure you are good at it. So being received. Now don't be so creative, okay, and write lots of statement over here. Narration is a brief description of the transaction. Share application money. You can write in detail if you want for 3,20,000 shares at rupees 5 per share, but when I've seen the solutions of so many papers given on the board website, they are not writing so much in detail, so let's not do that and let's follow it, because in exam you also have to manage time. So we close the entry, first entry is done. So let's understand the process. First applications came, and along with application came the money which hit our bank account. So bank account debit to share application account. Share application account is a temporary account what we are making, because there is a timing difference between money received and shares allotted. We have to write separate entries for it. We have received the application money, so from application money we will give refund to those who were rejected. We will transfer to the issued capital, so we'll construct the capital of the company, and what all advance we have received we will keep it in advance, that is over your share allotment money. So share capital, share application, account debit, ₹16 lakhs, to bank account will refund rejected 20,000 shares into rupees 5 per share, 1 lakh, to share capital account. Now capital over here, because we have got more subscription, but we cannot issue more than the issued shares. So issued shares are 2 lakhs into rupees 5 per share, 10 lakhs, to share allotment account. Now share allotment account, this we have already done working note number 2 for this, and in brackets I'll write for how many shares, for 1 lakh shares into rupees 5 per share, 5 lakhs. Now always remember share capital always with the face value. So I'll just mention over here FV. Okay. And share allotment is calls in advance what we have received. So we close the entry. We draw a line. Okay. Entry number 3. I'll leave one line. Now over here from this working, application is already taken care of. You received the application money, and from application money we have to write the narration being share application money utilized, and we close the entry. Now third, I'll leave one line blank so it becomes very clear. Okay, here also we can do that. Third entry. Now we have already taken care of the application. Now we will call the allotment. So when we call the allotment, we already know who are our shareholders. We have already decided and transferred that money to our capital. So over here, first we'll make a call. So we will invite shareholders, we'll tell them that because you are allotted so many shares, now you have to give us allotment money. So when we call, we'll create a temporary account, share allotment account, and for 2 lakh shares we are going to call rupees 4 per share. Now 4 per share is 2 plus 2. So that is 8 lakh rupees. 2. Equity share capital, or you can directly write share capital. Now always remember share capital with the face value. So into rupees 2, that is 4 lakhs, and 2 securities premium. Again 2 lakhs shares into rupees 2 per share. Narration, don't forget, being allotment money due with premium. And we close it. Entry number 4. Now, dear students, just understand the process. First, you received application and the money, that money you transferred to equity share capital and share allotment account. Now, third is you are calling the share allotment from all the shareholders. So that is entry number 3. Entry number 4 is now your shareholders start paying money to you except Simba. So bank account debit. Now, how much money we are going to receive? We have already done a working, that is working note number 4. We are going to receive 2,85,000. Now, I remember this amount because we have done the working. So, working note number 4, amount received on allotment. Amount due on allotment was 8 lakh. We already received 5 lakh. So, 3 lakh we are supposed to receive, but we have calls in arrears towards the premium amount from Simba, that is 15,000. So what we have received is 2,85,000. So this amount 2,85,000 we get from working note number 4. 2. Now here we will use calls in arrears account. Okay, you may not use calls in arrears account and directly write to share allotment. That is also one way of doing it, but generally students write calls in arrears and are used to it. So I am also writing calls in arrears account. Now calls in arrears we have done working note number 3, debit rupees 15,000. Now working note number 3 is calls in arrears of Simba. 40,000 is due. Out of that 20,000 we have already received. So 15,000 we have not received. Now this 50,000 is towards what? Because here there is face value, that is capital part and premium part. So we'll do this working. So from 25,000, 20,000, 10,000 into 2 will be allocated to capital and remaining towards security premium. So security premium due is 10,000 into 2, 20,000. Out of that 5,000 we have already received during application. So what is not received? 15,000. So here we will write 15,000 and 2. Share allotment account. You can see share allotment account 3 lakhs. Now share allotment account is squared off. How, dear students? Here share allotment account credit 5 lakh. I'll highlight it for you to understand. Then share allotment account credit 3 lakhs. Share allotment account debit 8 lakhs. So this account, temporary account, is now squared up. Okay, don't forget the narration. So being allotment money received except on shares of Simba. Again we close it. Entry close. So we have already tackled application and allotment. Application and allotment. Now we go for the final call. So fifth one. These are basic entries. Okay, you all should know it. Very standard entries. Share application, bank account to share application to share capital. Then share allotment to share capital, bank to share allotment. Then equity share, or we just write shares. Then share final call account, that is on 2 lakh shares into rupees 3 per share. ₹6 lakhs. Already we have done the working over here, 5 rupees, 2 rupees and 3 rupees. Because we already know our shareholders, so we have a faith on them that they are going to pay the money. So we directly transfer this money to share capital, whether we have received or not. Share capital account. 6 lakhs. Being final call money due. Don't forget the narration, dear students, is very important. You don't have to write the narration only if it's given in the question, that don't write narration. Otherwise, nothing is given, you have to write the narration. If it is given, then it is apparent that you have to write the narrations. Now 6-1 bank account debit. Now, for how many shares we are going to receive this money? You can see we have done the working over here that for 10,000 shares we did not receive allotment, and for 10,000 shares we did not receive the final call. So out of 2 lakh shares, for 10,000 shares we did not receive the money. So for 1,90,000 shares into rupees 3 per share, debit 5,70,000. To share final call account. Oh, sorry. We will not write directly to share final call, we'll write calls in arrears. So calls in arrears account. Now 10,000 shares into rupees 3 per share, 30,000. And to share final call account. You can see final call account squared up over here. 6 lakh debited, 6 lakh credited. Now in case if you are not using calls in arrears, then there will be a balance in calls, there will be a balance in share final call account which represents calls in arrears. Don't forget the narration. Being amount received on final call except by Simba. We'll close it. Now, all these three are handled: application, allotment and call. Now, over here we are going to forfeit shares of Simba because Simba did not pay the allotment money, Simba did not pay the final call money. So what will the company do? The company will forfeit the shares. Now forfeiting the shares means what? Forfeiting the shares means company will cancel their name from the list of shareholders. कंपनी उनके घर जाके थोड़ी ना शेयर वापस ले सकता है. नाउ एवरीथिंग इज इन अ डीमैट फॉर्म, सो द डिपॉजिटरी विल freeze those shares and remove it. Of course, there will be lots of legal formalities, communication will be there, but this will happen. So company forfeited the shares. Now what happens when the shares are forfeited? The shares come back to the company. At the same time, the amount which the company has already received is also kept by the company. I hope you understood. It means कि shares तो वापस आ गए, पर जो पैसे हमें मिल गए थे towards these shares, that money also I am keeping with me. I am not going to refund it. कि I have taken the shares back, so take this money back. No, that money is gone. And for that, for the company, this becomes a profit because shares are also coming back to the company and the amount received on share is also retained by the company. Yes, company will use now this money to reissue at a discount. So we'll see this in the entry. Very important entry for forfeiture. Now when we are cancelling the shares, we will reverse the entry for capital. Whenever we raise capital, we credit, now we cancel, so share capital account will be debited. So share capital account, now 10,000 shares into how much have we called up so far? We have called up complete rupees 10. How did we know this? Because we are saying Simba defaulted on allotment, it means allotment call was made. Simba defaulted on final call, it means final call was also made. So we have already credited rupees 10 per share to our capital account. And you can see the previous entry at every stage. Second stage, that is allotment, we have already credited for 2 lakh shares rupees 2 to capital. Over here for 2 lakh shares rupees 3 to capital. So we have credited to capital but we did not receive the money. Now we are forfeiting the shares. So what all capital we have created, we have to cancel it. So we debit rupees 10. So 1 lakh. Now in this sum, for 10,000 shares, Simba did not pay a part of this premium. So for 10,000 into 2, I'll just do a working over here. For 20,000 premium, we received 5,000 as a part of pro rata allotment. Company already had 5,000, but what is not received? What we did not receive is 15,000. Now, dear students, you need to understand that over here, while we credited securities premium account over here, we credited it with complete 2 lakh shares into 2, that is 4 lakh. But we did not receive 15,000 towards that premium. Now students, can you have a income account which is yet to be received and you have cancelled those shares and you know that you are not going to receive this money altogether? So what will you do? So this amount which has gone to your income, security premium, which is a capital income, but you are not going to receive it, you know that because shares are cancelled, so you have to reverse the premium. So over here, second effect will be securities premium account. Now again, working note number 3 has helped us to find out that security premium of rupees 15,000 was not received. Hence we are reversing it. 15,000. Here it is, working note number 3. Okay. Now, I hope you are able to understand this concept, why we are debiting security premium account, because security premium account we treated as our income, including these 15,000, but these 15,000 we are not going to receive forever now because the shares are already cancelled. So you cannot have an income balance where you know that you are not going to receive the money. So that is a wrong accounting. So we have to reverse that. So security premium account will be debited. 2. Now share forfeiture account. Share forfeiture account is that account. It is for that money which the company has kept with it. Company cancelled the shares, but for those shares, whatever amount was there with the company, company did not refund it. Company kept that money, but that money company had received towards premium, towards capital. But now share capital we have already reversed. So where will we transfer this money? So we'll create an account, temporary account known as share forfeiture account. It is type of a capital profit account. The balance in share forfeiture will ultimately be transferred to capital reserve. So share forfeiture account is for the amount which we have already received on those cancelled shares. We will see that how much amount we have already received on share forfeiture. So we have received rupees 5 per share on application, and how much we have received during allotment. So towards allotment we have already received 25,000 rupees. So total amount what we have received is 2. Share forfeiture account. Now share forfeiture account is that account where we will record the money what we have already received on the cancelled share. So this is type of our profit, it's a capital profit. So how much amount we have already received on shares, we need to mention this. So we have received for 10,000 shares rupees how much? So on application we received 5 per share, and on allotment towards capital we received 2 per share, that is rupees 70,000. Now I'll explain this in detail. See, dear students, on application we received 50,000, that is rupees 5, and for 25,000 which we have received in advance, 20,000 was towards capital. So this 50,000 plus this 20,000, that is 70,000. So 5 rupees on application and 2 rupees on allotment towards capital, that is 7 rupees per share we have already received and which we have forfeited, and this amount we have transferred to share forfeiture account. 2. Now share forfeiture 7 rupees we have already forfeited, but we also have calls in arrears, so we will directly credit calls in arrears. Now what is the amount of calls in arrears? Calls in arrears, you can see the previous entry, calls in arrears. Over here I'll highlight it, 15,000, and then calls in arrears I'll highlight it over here, 30,000. So 2 calls in arrears, we have 15,000 plus 30,000. So total calls in arrears is 45,000. So the entry is share capital account debit 1 lakh, security premium account debit 15,000, to share forfeiture. Now security premium account debit, because this amount of premium we have not received, so it will be reversed from security premium account. Share forfeiture account is that account which represents the amount what we have forfeited on shares for which we have cancelled the capital. So forfeiture account represents a part of your profit कि shares भी वापस आ गए, पैसा भी हमने रख लिया. We kept the shares, we also kept the money. So where do we keep this money? We transfer it to a temporary account known as share forfeiture account. So that is rupees 7 per share, so 70,000. And calls in arrears we are now not going to receive because shares are already cancelled. So calls in arrear account will be 15,000 plus 30,000, that is 45,000. Always verify your debit should be equal to your credit. Let's write the narration for this. Being shares of Simba forfeited. Now we have taken back the shares in the company, but that's not the intent. Our intent is not to make money by forfeiting the shares for those people who did not pay the calls. Our intent is these shares should go to the general public. So now we reissue the shares. But now when we want to reissue, we already know we have made profit on these shares, we have some balance in share forfeiture account, so we can issue these shares at some discount. Now over here, his shares, Simba's shares were forfeited, and out of these 6,000 were reissued at a discount of 2 per share. It means a 10 rupee share is given to some new shareholder at rupees 8 per share. So now when we are reissuing it, entries are very simple. Bank account debit. So in the bracket we will write 6,000 shares into rupees 8. How did we get 8? 10 minus discount of rupees 2. So 48,000. Now this discount of 2, from where we will give the discount? Obviously we will give the discount from what all money we have forfeited. So share forfeiture account. How much discount? 6,000 shares into rupees 2 per share. 12,000. 2, very simple, share capital account. So 6,000 shares, capital always with the face value 60,000, being shares of being, let's write the amount over here, that will be easier. 6,000 shares and bring more clarity of Simba reissued at rupees 2 discount. We close it. Now, ninth one is a very interesting one. Out of 10,000 shares forfeited, you reissued 6,000 shares. So that is settled. But the 6,000 shares what we reissued at a discount. It means now share forfeiture account has some balance. We have made finally some profit on reissuing the shares. We need to find that and we need to transfer that profit to capital reserve. So first I'll write the entry, then I'll do a working for you. It's a very important working. Share forfeiture account debit to capital reserve account. Now I have made a formula for this which will make it very simple for you. The formula is number of shares reissued into profit per share. So how do we calculate this? Number of share reissued, 6,000 shares we all know, into how much have we made by reissuing these shares. So first we need to find out how much have we forfeited on these shares. So you can see share forfeiture account. We have forfeited rupees 7 per share. You can see the cursor over here, 7 per share. So 7 rupees is what I forfeited. I gave a discount of rupees 2. You can see it over here, discount of rupees 2. So minus 2. So which is rupees 5 per share is what profit we have made. So 6,000 into 5 is 30,000. Now, here you have forfeited shares worth 10,000, but you are reissuing only 6,000. So here you cannot do the balancing thing, that you cannot say कि share forfeiture account credit 70,000, share forfeiture account debit 12,000, so 58,000 I'll transfer to capital reserve. No, that will be wrong, because you still have 4,000 which you have not yet reissued. You remember the working what we did in lecture number 1? You remember the working what we did, the sums what we did in lecture number 1, that we had share capital, the breakup was authorized, issued, subscribed, and then share forfeiture account. So for those shares what we have forfeited but we have not yet reissued, that balance we have to include it over there. So share forfeiture account will have a balance of how much? Can you mention in the comment? That will be 4,000 shares into 7, that is 28,000. We can cross verify that out of 70,000, 12,000 you have already given and 30,000 you have already transferred. So 42,000 out of 72,000 is gone. What is left is 28,000. So dear student, always remember, don't go for balancing of share forfeiture account. That you can do only when number of shares forfeited and number of shares reissued are same. But if they are not same, you go for this formula, number of shares reissued into profit per share. That is over here 6,000 into rupees 5, 30,000 being gain on shares reissued, transferred to capital reserve. That's it. Now total, I have a formula over here, so it directly comes over here. You need to do the total to complete the format of journal entry. I would advise that and strongly recommend it, okay? That don't leave it open, do the total, because the teacher who is checking, they may like to see this total. So do the total and close the sum. Now go through the sum once again. I'll share this question and I will share the solution as a PDF. So anytime you want to refer, you can refer it. It will be given in the descriptions below. Okay? Just go through it. See if you have any doubts, any difficulty, feel free to contact. Okay, so dear students, we have seen this sum over here and I hope you have understood every concept and every working and the journal entries. This is a very scoring chapter. It is a lengthy lecture right now because I was also explaining the concepts, but while you do this sum, I'm sure you will be able to complete it very easily. Okay, so I'll see you at the next lecture with few more challenging sums to make your concepts clear. Till then, study hard, work hard, and love what you are doing. Love your studies. Make this student life part of studying an enjoyable moment. You're studying for your future, you're studying for your career, you're studying for yourself, you're studying for your family. So enjoy what you are doing. That's the message I would like to give you. Okay, so bye bye, take care, best of luck.